The world is changing, and you are going to have to adapt with it. AI singularity is here. We live at a rate of monetary debasement we haven't seen in over 80 to 90 years. The boomer advice of 60-40 portfolios, buy bonds, get 2-3% yield, is over. Buying a house at 2-3 times your salary, surviving on one income, is over. With this new wave of change, you now stand at a crossroads because the world is no longer willing to wait for you to catch up. It is simply moving too fast. So in this new wave of investing, what do you invest in? And how do you analyze the companies that will thrive in this AI future and this future driven by technological advances that advance faster and faster, compounding on itself every single year? You can no longer rely on PE ratios. Tesla itself is above a 350 PE ratio. You can no longer rely on just earnings statements or debt to income ratio for companies. You must change your outlook. You must change the way you view the world, and you must change the way you view investing. And most importantly, you must decide and be able to figure out what constitutes a good investment and what constitutes a bad investment. With this, I bring you the new generation of Bitcoin Treasury Companies, how to analyze them and how to profit on their future. This is the Debasement Index. Let's get into it. You guys, welcome back. This is the Debasement Index. My name is Angel Rios, and this is a channel solely focused on building capital in a fiat world together. So, as I said in the intro, the topic of today is how to look at a Bitcoin Treasury company. We're going to look at 3 examples. Strategy, ticker symbol MSTR, Metaplanet, ticker symbol MPJPY, and or MTPLF if you want to buy the stock directly and not the American Associated Shares. And third, Strive Asset Management, ticker symbol ASST. Now, these are the 3 companies that I am invested in, and I'm going to show you why these 3 companies, in my opinion, are the 3 best investments to make when you're trying to take advantage of a Bitcoin play in the stock market, and how to further your Bitcoin exposure because of amplification. Now, a lot of people have gone burned, absolutely burned on these Bitcoin Treasury companies. I mean, how many people have lost an incredible amount of money on companies like Naka, right? And AKA. And it's because they weren't reading the fundamentals properly. Even on MSTR, ASST, and MTPLF, people have lost money in the short term. In the short term, they have. But it's because they bought at a time when they shouldn't have. I'm going to show you how to avoid buying at the top. I'm going to show you how to DCA into your investment. And most importantly, how to analyze the companies. Now, the metrics that we're going to go on for analyzing the companies, we're going to talk about rate of Bitcoin buy. Okay. We are going to talk about amplification. We are going to talk about Bitcoin per share. We're going to talk about Bitcoin yield. And we're going to talk about why it is incredibly important for the Bitcoin Treasury company that you invest in to have a preferred stock. Incredibly important, especially to bring up Bitcoin per share. So all that in this video. Without further ado, let's get into it. So if you've lost money in the short term, or you have unrealized losses in Bitcoin Treasury companies, just know it's not really your fault. And the reason it's not really your fault is because the analytical framework on how to break these companies down onto when they are undervalued, when they are overvalued, or when the buy is neutral buy hasn't quite developed until right now, when a lot of people felt the pain and they've been able to understand where they made a mistake in their entry. Okay, so I want to break these metrics down for you guys and what numbers each metric has to be for you to feel like, you know what, right now it's a pretty good time for me to buy and for me to get in here. Okay. So if we look at Strategy's main page, okay, you can find this information on strategy.com. All right. You're going to see a bunch of different metrics. Okay. A bunch of them. You can see like the base of return since they adopted the Bitcoin standard for Strategy, right, is 948%. But in this year, the return is negative 46% and the 3-month return is negative 26%. So if you had bought, 2-3 years from now, you'd be up 948%. But people bought at the top of the Bitcoin top in October, and well, they've lost 26% or 46% of their initial investment, unrealized losses. Now, here are the metrics that you need to look at. Okay, the number one most important metric to know if your buy into this Bitcoin Treasury Company is overvalued or not is MNAV. Okay, so net asset value. So where is this company getting priced compared to what they actually have on their balance sheet? Okay, so as you see here, MNAV, yes, is 1.22 for Strategy, meaning they're having a 22% premium on their stock for the Bitcoin per their Bitcoin on their balance sheet. Now, this is not necessarily a bad thing. This is a good thing. And on Bitcoin bull runs, this is absolutely going to help you and work in your favor. However, I urge you, if you see a Bitcoin Treasury Company like right here with Strategy, and the MNAV is above 1.5 to 1.7, it's probably a bad time to entry because you're probably, in the middle of a bull market. And if you know when to exit, that's fine. But for long term, I think it's a bad time to entry. Now, if you dollar cost average and that's the way you invest, like myself, you don't really care. Okay. But a lot of people bought Bitcoin Treasury Companies at a 4x NAV, at a 5-time, at a 6-time valuation. And then when Bitcoin crashed, well, the stock crashed with it on an amplified form. So they lost even more money than even if they had just invested in Bitcoin. So I urge you, you need to look at MNAV. MNAV is one of the most important, if not the most important metric. The higher the MNAV is, the higher the valuation of that company compared to the balance sheet of Bitcoin that they have. Okay? Now, another very important factor that you need to look at is the net leverage of the company. What percentage of debt to assets ratio do they have on their balance sheet? Now, here with Strategy, you see that the net leverage is 13%. Now, this is why when it comes to, for example, the naysayers or the bears on Strategy drive me absolutely insane when they say they're going to get liquidated, if they have too much debt, so on and so forth. Compared to the average of the S&P 500 companies, 13% is pristine. It's a pristine balance sheet. Okay, I have it right here. So the average for S&P 500 companies as of early 2026, the net debt to EBITDA, okay, earnings based, okay, it's approximately 295%, 2.95x. And this represents how many years of current earnings it would take to pay off all debt. So almost 3 years of earnings at the current rate for these S&P 500 companies to pay off their debt. Their debt to equity, which is capital based, is approximately 61%. Wild. Which means that 61 cents out of every dollar of share that you purchase is their debt. And then equity to assets, which is the big way that Strategy, Strive, Metaplanet kind of guide themselves, or the standard that they guide themselves with, the S&P 500 is 46.8%. So what are we talking about here? They are in no risk of being liquidated, and they have more pristine balance sheets than S&P 500 companies. The diversified portfolios buying the VU or the VTI index. Wild. But you need to look at net leverage because some Bitcoin Treasury companies don't have a healthy net leverage. They're more on the line of the S&P 500 companies. So you need to pay attention to that. You need to look at pristine balance sheet Bitcoin Treasury companies. Okay. The other thing that you need to look at, and this is more based on your returns, and then to know just how much the stock is going to go down, how much the stock is going to go down, and how much the stock is going to go up in the case of a Bitcoin bull run or in the case of a Bitcoin drawdown. So as you can see here with strategy, the amplification is 35%. Now, amplification, what does that mean? The reason this is important is because you're going to be able to see what your outsized returns are going to be in dollars. That's a big caveat there because we like Bitcoin mostly. That's why in the public portfolio, 75% is Bitcoin and cold storage. But if Bitcoin goes on a bull run and it's just flying high, yes, in this case, MSTR strategy is going to go up 35% more than the Bitcoin price. So you're going to have 35% more gains in dollars than you are if you were just buying Bitcoin. That's why I'm a big proponent of buying treasury companies on a bear market. So when the bull market hits, you can go ahead and redeem some of those gains from those treasury companies in order to buy more Bitcoin than you would have otherwise with, just earning your salary and earning cash. And the important thing here is growing your Bitcoin holdings. Okay, but amplification, very important to know how much you're gonna get outsized returns on a bull market and how much the stock is actually gonna draw down more than Bitcoin during a Bitcoin bear market. Amplification, extremely, extremely important. And the reason they're able to do that is because of the leverage that they have on their Bitcoin, okay? Now, for the most part, the amplification that I like to see is 25% or more. So when you're buying one of these treasury companies, it's amplified Bitcoin. Yes, you're making outsized returns, but it's also outsized drawdowns on Bitcoin. Okay. So when done properly, and when you're able to actually, analyze these companies and the framework, you're good to go. Right? You're going to get more Bitcoin in the long run. Now, the next super important thing is the rate of Bitcoin buying. So with strategy, if you look at the rate of Bitcoin buying, it's absolutely insane. I mean, they buy every single week. Okay. If you look at here in this chart, every single orange dot is a time that, strategy has bought. And, they're getting better and better at it. That's why in this chart, you see an accumulation of orange Bitcoin dots or acquisitions, more towards the right of this chart, between July 2025, January 2025 and January 2026, so for a whole year. And that is because they've rolled out their preferreds, but we'll talk about that. Now, on newer companies, like for example, Metaplanet or Strive, I'm not going to judge them too hard on the rate of Bitcoin buying because they're just starting. If you look at strategy, their buying didn't really become weekly until they were, they started turning on the ATMs and the preferreds, and they solidified the way in which they were acquiring Bitcoin in order to increase Bitcoin per share. Okay. Now, I talk about Bitcoin per share a lot. And the reason I do that is because there's a very important metric that we need to talk about, and that is Bitcoin yield. Okay, as you can see here for strategy, the Bitcoin yield for 2025 was 22.8%. So what does that mean? They actually added to Bitcoin per share. Okay, the way these companies work is, let me explain it to you this way. They're on a Bitcoin standard, yes? So the more Bitcoin they have on the balance sheet per share, they're doing their job correctly. The only way they dilute shareholder value, because the shareholders for these companies want Bitcoin exposure, the only way they're diluting shareholder value is if the Bitcoin per share drops. Okay? So one of the ways that strategy raises a lot of money in order to buy Bitcoin is it sells stock. It actually dilutes stock. It dilutes shareholders in the number of shares that are outstanding in the market. However, when they do that, they do it very precisely in order to strategically increase Bitcoin yield and therefore increasing Bitcoin per share. This is very important. If a Bitcoin Treasury company is not increasing Bitcoin per share, that means their strategy is actually diluting shareholder value, because shareholders in these companies want to increase their exposure to Bitcoin. Therefore, the company needs to increase their Bitcoin per share exposure, and that's what Bitcoin yield represents. Now, if strategy increased Bitcoin yield, or the number of Bitcoin holdings represented by their total number of shares outstanding, and Bitcoin yield grew by 22.8%, they're doing their job fantastically well. Very proud of the strategy team for what they did in 2025. They did an outstanding job. Now, the last metric that I want to look at for these Bitcoin Treasury companies, and we're using, strategy as an example, is, do they offer a preferred stock? And the reason that's really important is because any money that they raise through preferred stock raises Bitcoin yield, because they didn't have to acquire that capital in order to buy Bitcoin, or those dollars in order to buy Bitcoin, through diluting, quote unquote, shareholder value by issuing more shares. Yes, so this is an extremely useful tool in their tool belt, especially if it's successful, in order to increase Bitcoin yield and Bitcoin per share. So as you can see, strategy has Stride, which has added 1.4 billion to their Bitcoin balance sheet. Okay, you have Strike, which has added 1.4 billion to their 1 billion to their Bitcoin balance sheet. You have Strife, which has added 1.2 billion to their Bitcoin balance sheet, because people purchase these yield instruments, and what the company does with that money is they go ahead and purchase Bitcoin with it. Yes. And then Stretch, which is the absolute monster that they have, which is going to absolutely take the investment world by storm, is trading at $100 at par right now, and Bitcoin's in a bear market. I mean, absolutely amazing. The market cap for Stretch is 3.458 billion, which means that that's the amount of cash they've been able to extract out of Stretch in order to buy more Bitcoin, therefore adding Bitcoin yield and therefore Bitcoin per share. So it is very, very, very important that the companies that you invest in are offering a preferred stock in order to increase Bitcoin yield, because that is how you know the company is going to be successful if this Bitcoin treasury thesis is proven correct, right? Digital capital turns into digital credit through the preferred stocks. So I wanted to use a strategy as the example. However, Metaplanet, you can assess it through the same thing. I'll put the websites to Metaplanet, to Strategy, and to Strive in the video description down below, and you'll be able to see what I'm talking about and play with the numbers. But Metaplanet offers Mars and Mercury, which are preferred stocks as well. At Strive Asset Management, ASST, they offer SATA, right? So they have a preferred equity as well in order to increase Bitcoin per share and Bitcoin yield. So to recap everything that we talked about in this video, you want to be able to analyze these companies when you're purchasing them. Am I purchasing this company at a reasonable MNAV, net asset value, right? Is it above 1.8? Is it reaching 2x? Am I buying in overpriced territory? Does the company have preferred stocks that they can issue into the market in order to increase my Bitcoin per yield, or do they solely rely on the sale of stock into the market, therefore diluting shareholder value? Does the company have above a 20% amplification on Bitcoin? Because if I'm going to invest in these companies, hey, I want outsized returns. So do they have an amplification? What is their net leverage? Is their net leverage 12%, 13%? Or is their net leverage 80%, 60%, 70%? That plays a role into whether or not you are going to purchase this company. Does the company post on their page whether they're increasing shareholder value through Bitcoin yield? Are they increasing Bitcoin yield? And if they are, at what rate are they increasing Bitcoin yield? For example, Strategy, as you saw, was over 22% for the year of 2025. I believe Metaplanet and Strive Asset Management also have insane Bitcoin yields. So you wanna go ahead and look at all these things before you invest in these companies. If you invest in a company like Naka that is horribly managed and the numbers just look jacked up, but you were like, hey, the stock is going up, so let me FOMO into it. I don't want to say you deserve the loss that you had, because this is all relatively a new concept that's evolving and maturing. But you didn't look at fundamentals, which again, I don't think it's your fault. But then you can look at videos like this and learn how to analyze these companies so you can feel confident and have conviction into buying these treasury companies and understanding that their value is absolutely going to explode into the future, because they are actually going to be the digital banks that we rely on in the future, because they have the scarcest, most valuable collateral on their balance sheet, and that is Bitcoin. And that is the bull case for these companies. Now, with that said, guys, that's it for me for this video. If I've earned your subscription with this video, go ahead and hit the subscribe button. I really appreciate it. We're at 52 subscribers, and I am extremely, extremely grateful and extremely honored by it. And hit the like button if you enjoyed the video. Hit the notification bell so you don't miss any future videos. And go ahead and share it with anybody that you think would find this information useful. And also, go ahead and hit the comment section, because I want to know who's investing in these companies, what you guys feel about them. I'm going to start building a community of debasers, which I think will be a lot of fun. I'll reply to the comments and we'll have a good time. Again, this is the Debasement Index. My name is Angel Rios, and this is a channel solely focused on building capital in a fiat world together. Y'all have a great night.